Hey guys, how's it going? So, today's Globe and Mail story about how 10% of Toronto area buyers won't be able to refinance their mortgages and could be in trouble is getting a lot of traction on X and different social medias. Now, you have to remember what happened a number of years ago when interest rates were at their bottom. A lot of people took fixed payment variable rate, and then the interest rate spiked. Their payment didn't change. What changed was their interest, and it got stacked on stacked on stacked on interest, and their amortizations blown out. They bought at the peak, they got interest rates very low, and then the market's done this. Interest rates went up, values went down. And now they have to renew. So where does the refinance come in? Refinance would come in if, well, their amortizations got blown out, right? 50, 60, 70 years, even longer. Those now have to be brought back into line. So that's problem number one. Problem number two, the values on their properties have dropped since then. Problem number three, they're renewing into much higher rates. So their amortization is going to come back into line. Their deposits or their down payments have been wiped out. Many of them bought with no CMHC insurance because they had over 20% down. And if they go to try to switch lenders and shop rates, they won't requalify. So the renewal, if their bank offers them a renewal, it's going to be not at really a discounted rate. It's more likely to be at a posted rate. So they're in trouble. But this was kicked down the road by Chrystia Freeland when she was finance minister. They allowed this to happen in the banking regulations, right? Kick the can down the road. That wasn't for anybody's benefit other than their own. So they didn't have to, at the time, deal with banks calling up people to align to get the interest payment or put more money down so that their spread would stay right. So now they have to bring the ratios back into line. If they bought with 20% down uninsured, they have to bring them back to down to 20% loan to value ratio. Their values have plummeted. Their equity's been wiped out. So this is the problem. I talk about this on my website, my blog, on my website. This is the detail of it. Goes into a lot further explanation. But I just wanted to go beyond the headline that everybody's talking about. And also, there's a lot of people who this won't affect. They didn't take those types of mortgages, or they bought years and years and years in advance. So this is not for everybody. We all know the media and they like sensational headlines, but this is a bit to cut through the noise.